Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after the Guy Benson Show at 3 and right before the 790 KBC News Blitz with Randy Wang at 5. And stay tuned at 6 o'clock this evening for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back on the air at 6 o'clock this evening. Every Thursday evening at 6 with Mark Hood, the CEO of the Union Rescue Mission. And tonight we'll be focusing on how the Union Rescue Mission is helping the alarming number of children on Skid Row. Right now, it's Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Another banner day for Bitcoin today, hitting record highs above $111,000. Mixed finish for stocks today with little net change for a change after getting used to triple-digit moves for the major averages on a regular basis in recent months. Stocks making little progress today as investors took in the House vote to approve President Trump's big, beautiful tax bill and what it means for the U.S. debt as well as for the overall economy. The Dow coming in for a closing loss, drum roll please, of 1 point to 41,859. The S&P 500 slipped 3 at the closing bell, and the NASDAQ gained 53 points. The yield on the 10-year note, which is being closely watched these days, has moved to 4.54%. That's the one that impacts fixed-rate mortgage rates, which have moved higher again this week. Bitcoin, big story, hovering all-time highs above $111,000 at the moment. Right now at $111,040, down about $200 here at the moment. We did see the king of the cryptos moving higher following the House of Representatives vote to approve President Trump's big, beautiful tax and spending bill. The House did pass that bill, the giant tax and spending package, by a single vote after a last-ditch revision aimed at winning over conservative Republican holdouts. Changes in that bill include a more generous deduction for state and local taxes, allowing the bill to move a step closer to becoming law. Now on to the Senate. A lot riding on that bill for small businesses nationwide. We'll get an update on that this afternoon from Jeff BRABANT, scheduled to be with us, Vice President of Government Relations for the National Federation of Independent Business, also known as the NFIB. Wall Street, meanwhile, watching that legislation, which could add trillions of dollars to the existing $36 trillion deficit, especially after Moody's cited the proposal in Washington in downgrading the U.S. credit rating last Friday. Longer-dated bonds in high focus after the Moody's downgrade, putting a spotlight on U.S. debt. The yield on the 10-year note moved to 4.54%. The 30-year flirted with 5%, with highs last seen since the financial crisis. The 30-year yield dipped slightly below 5.1% after seeing highs last seen during the financial crisis back in 2008. Taking a look at the economic reports out today, it looks like economic output did rebound in the month of May. Businesses taking in the president's tariffs rollback, with the S&P 500 Global Flash U.S. Composite PMI, which captures activity in both the services and manufacturing sectors, climbing in the month of May compared to what we saw in April. Sign of softening in the job market. The weekly report on initial jobless claims out today showed the number of people in unemployment lines did pull back a bit. Total 1.9 million, bringing the 4-week moving average of continuing claims to the highest level seen since November of 2021. Mortgage rates did rise again this week after the U.S. lost its top credit rating. The average 30-year fixed, according to the latest survey from mortgage giant Freddie Mac, was 6.86%, up from 6.81% a week earlier. The average 15-year fix now at 6.01%, up from 5.92%. And, of course, we are watching what's happening with those bond yields, which impact those rates. President Trump hosting a dinner for his top meme coin holders at a important moment for the crypto world, with Bitcoin hitting record highs. We'll try to find out what's happening at that dinner tonight. The president reportedly hosting an exclusive dinner for about 200 of the biggest buyers of the Trump official meme coin, an event that's stirring some controversy. Meantime, we'll take a closer look at that Trump meme coin price here a bit later this hour. We see Ethereum, by the way, hovering at around 2,636. Bitcoin just above 111,000 here at the moment, and Doge right now at 24 cents. Gas and oil prices have come down over the past year under President Trump, especially this year, with big changes in energy policy since the president took office. Gas prices have come down dramatically compared to a year ago, heading into the Memorial Day holiday weekend, where a lot of people will be hitting the roads, but prices still stubbornly high here in Southern California. We'll get an update this afternoon from prominent oil industry analyst John KILDUFF with, again, Capital and CNBC contributor. But first, on your money, the markets, the economy, the whole works now. Joining us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for taking the call here this afternoon.
Frank, I'm delighted to be with you, but I got to tell you, as an investor and as an American, as a tax-paying American, I'm kind of pissed. I mean, what happened to fiscal responsibility? It seems like just a couple of months ago we were talking about being mailed a $6,000 tax credit or a tax check because of all the money that Doge was going to cut. Remember Doge? Oh, they were just going to cut so much money. They were going to have so much money just to send everyone back. Well, where are all those cuts? They're nowhere to be found. And without getting into all the intricacies of the bill, Frank, I mean, it's going to add $3.3 trillion to the deficit over the next 10 years, exactly at a time that President Trump, in my opinion, needs to show some leadership here. The deficit and the debt need to be cut like dramatically. So I'm very frustrated about this. Also, rather than move towards any type of a Steve Forbes type of a flat tax, there's all these new temporary tax gimmicks, Frank. You know, temporary tax breaks for tipped wages, a temporary deduction for interest on loans for American-made cars. So they're making the system already complex, even more complex, and not even cutting spending to boot. So, you know, it's no wonder that U.S. stocks, Frank, and U.S. assets are underperforming year to date by a wide margin.
Laying it on thick this afternoon, Jonathan HOENIG, Fox News contributor and portfolio manager at Capitalist Pig Hedge Fund. Again, the book is called Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Thanks for giving your honest assessment here. President Trump, Elon Musk, and the Republicans did promise, about $1 trillion a year in budget savings by cutting out the waste, fraud, and abuse that were found in the federal bureaucracy. So that's interesting that you note that, and we're looking for we're going to try to get some more information about that later this hour when we talk to one of the top people at the National Federation of Independent Business. There was certainly a lot riding on this bill when it comes to small business tax breaks and so forth, and it looks like there is something in there for small business people, so we're eager to get more information about that. But as far as market reaction is concerned, and of course in anticipation of this vote, we did see Moody's downgrade the U.S. Uncle Sam credit rating last Friday to one notch below the top rating, as have other rating agencies already done, and now the market's been taking that in all this week. Where do you see things go from here?
The vigilantes are back, Frank. You were a very young man back in the 1970s. I don't know if you were even born back then, but the bond vigilantes are back. They're sending, in my opinion, very clear signals. You know, the yield on the 30-year sliced through that 5%, almost like butter, now challenging 5.1%. Yields going up around the world. In fact, the same yields that panicked the president and pressured the president into dropping a lot of the tariffs. So, they can kind of spin a great story, but the fact of the matter is that, as you said, the 30-year bond yield, is decidedly over 5%. It was 1.4% just 5 years ago. So I just see this lack of fiscal discipline in D.C. really prompting a sell America trade. And I'm continuing to recommend and look at a lot of bonds and stocks, assets that are non-American, non-U.S. domiciled in terms of their currency. I think that's where the money's been made so far in 2020 and probably where the trend is likely to continue for the rest of the year.
That's very interesting. And, of course, this is the year that we saw gold hit a record high above $3,500 an ounce. Right now it's pulled back since that high, down just below $3,300 an ounce. It was above $3,300 yesterday. But the other big story, Bitcoin hitting record highs. I got to get your reaction to that big news, above 111,000 here.
Well, absolutely. And Frank, a rising tide lifts all boats is one of the great old sayings. And you mentioned gold. One asset that I know I've mentioned on your program a few times that is finally taking off along with gold is platinum. Ticker symbol on the ETF on that one is PPLT. At one point, platinum traded at a premium to gold. Traded at $2,000 an ounce at a time when gold was barely $1,000 an ounce. Well, that's actually changed in the last 10 years, especially. So I like platinum, PPLT, and I do think gold and silver. I mean, you have to look 3-5 years out when you're looking at these markets, Frank, because they can put you to sleep. They could go nowhere for 6 months. But I do think that those all-time highs will not stand. I think there'll be new, fresh all-time highs. And I have to say, I've been impressed with Bitcoin. It seems to me like the market really is looking for an alternative to the U.S. dollar. And, President Trump has always bragged about being the king of debt. Well, the U.S. bond market is really shuddering these days. And my fear is that if the U.S. bond market shudders, the entire global financial system really could shake. So Bitcoin might ironically turn out to be a great safe haven play if U.S. yields really start to spike.
Very interesting. So more people getting the laser eyes on here. Bitcoin, and by the way, Ethereum has seen an eye-popping rebound this year. Right now at above 2,600, well off its all-time high, but certainly renewed interest in that one, given its big move on the upside and pretty much across the board here, but especially Bitcoin getting the big news here with record highs above 111,000 here as we speak. In fact, we're on the air yesterday, it was making record highs. So we'll continue to keep a watch on that, and maybe what you say might move the markets here.
Well, and Frank, and keep in mind, all of us, we have a fear of buying an asset at a record high. There's always a sense of, I don't want to look like an ass, or I don't want to look like a jerk having bought the all-time high. How stupid will I look? But, it's the nature of markets to trend over time. This is what I write about in Price's Primary, and I know what you followed so long as a journalist. And oftentimes what we think of or what we report on as being the high isn't the high. It's just a high on its way to new all-time highs a month or 6 months or even, a year after the fact. So just looking for those strong trends, and Bitcoin strength has really impressed me. A lot of the Bitcoin-related stocks are at 52-week highs, and as we always say, don't fight that tape. And I think if you're looking for a area that's working in the market right now, you have to be evading reality to not see that Bitcoin is working, and it's working in the face of other areas of the market declining fast.
All right, yeah, hard to ignore that right now as we speak. Bitcoin up another $1,600 at $111,210 here at last check. We're going to make it a point to follow the price of Bitcoin here this hour. So we're watching that one, and those Bitcoin miners and the Bitcoin ETFs, BITO, for example, which throws off an impressive dividend. I don't know if you have a chance to take a look at that, but BITO looks to throw off a monthly dividend.
Yeah, there's been an incredible genesis, Frank. It's comes from a time where Bitcoin literally was traded on physical coins, what they used to call cashless Bitcoins, or at these obscure meetups among tech nerds. We've come to a point where there's probably a half dozen, maybe even a dozen or more exchange-traded funds, all types of crypto exposure, double crypto exposure, triple crypto exposure, limited crypto exposure. So, advise your audience, take the time to do your due diligence, to understand whatever the product it is you're buying, and always have a stop in place. And for me, Frank, that gives me the confidence to buy something that's risky, because I know whatever it is, whether it's Bitcoin or General Electric or Boeing or anything else, 20% lower, I'm out. I'm limited my potential risk by using a stop loss order. So it's just a good technique, I think, for people to get into, because it gives you the confidence to take a risk. You're going to take a risk, but it's not going to be an unlimited risk, and that's what that stop loss order does.
On the live with investment expert Jonathan HOENIG, and zooming out to the big picture for a moment before we get your specific suggestions here. Are we in a bear market here with this bounce back we've seen, or what do you see ahead for the overall market?
Well, part of what's so frustrating, Frank, is that so much of the volatility in the first quarter, especially, and in April especially, there's just no question that it had to do not with the amount of Huggies that Walmart is selling or the amount of routers that Cisco is selling, but from Washington, D.C. And, despite all of the, aspersions cast against businessmen as being short-term focused, they look long-term. When Intel or when a big company is looking to build a plant, they're looking 10, 15, 20 years out. And it's pretty obvious that the president, often with his trade policy, is looking a few days out, even a few hours out. And it makes it a real difficult environment in which to invest because you really can't look too far out. So I'm just hoping here in the second half, especially, we can have some more stability in policy, and not using necessarily trade as a day-to-day cudgel, making it so difficult for investors and business people alike, even just to plan their business. I mean, Frank, there's a lot of entire business models that rest on low-cost imports. I don't think there's anything morally wrong with that. I think that's a particularly fine way to run a business, but that's all up in jeopardy when the president, on a moment-to-moment basis, has the power to basically determine, at whim, seemingly, what that tariff rate is going to be. So I think we need to have some clarity on that issue, really, to be able to grow and continue to thrive as a country.
Mercifully, and we'll be talking more about this later this hour, oil prices have been hanging around $60 a barrel or so. They've come down this year, helping the inflation story quite a bit. What do you see ahead in all this for oil prices, energy prices, and for the energy stocks?
They certainly haven't been winners at all, and it's been tough to find areas of real strength. Even the big names that I generally like, the XLE, it's down about 6% year to date, and you could make the argument that that's telegraphing a slowing economies. You could make the argument that's telegraphing just additional supply, but for me, it's telegraphing just a sense of wait and watch.
No Contest Wrestling. O'Shea Jackson Jr. and T.J. Jefferson with the biggest names in the game.
Give it up for the Dark Angel.
First one.
First.
I can't believe it.
NXT double champion. Welcome to King. Lex is king.
I don't know if I'd be where I'm at now if I didn't take the path that I took.
Ladies and gentlemen, Jada Parker.
What made you, after the soccer career, go WWE?
The answer I always have to that is why not?
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
These aren't incredible laggards, energy writ large, but they certainly aren't leaders either. And, sometimes markets surprise us, Frank. During the Obama years, you'd have thought that big oil would have done terribly, and big oil actually did great under Obama. So sometimes, it might surprise us. One I do like in the oil patch I've mentioned before is AMLP. That's an Alerian MLP, Master Limited Partnership Exchange Traded Fund. So it's a whole basket of these energy-related infrastructure plays. It pays around a 7% dividend, so it gives you a little wiggle room in terms of price. But I do think that's going to be some place that, if you're willing to wait, you can make money on the AMLP. And I do own that one for clients over at CapitalistPig.com.
All right, and the other thing I wanted to mention, under the president's tax bill, looks like the solar stocks took a hit today. First Solar, Enphase, Sunrun, all moving lower. It looks like there will be some changes there as far as the tax credits are concerned that would impact these companies. What's your reaction to that news here?
Well, there's a great way to follow them all, and it's an ETF called, and I'm not making this up, it's called TAN, T-A-N is the ticker symbol, and it's a basket of exactly these solar stocks. They're down 32% over just the past 1 year, 32%, and down another 7% today on that news. So, they've been, many have said they've been economically unfeasible for quite some time, and the market's really proven that true. So, given the direction that the president's taking on oil and gas and fossil fuels especially, I'd be hard-pressed to be buying what still looks like a falling knife to me, and a lot of the so-called green energy stocks. People made a hell of a lot of money for many years under President Biden, under President Obama, with so-called green energy. But that one thing does seem clear is that it's not an area of real interest to President Trump, and you're likely to see a lot of those subsidies, I think for the better, get cut.
All right, so what's the inverse? Is it Ghost? We'll have to check that one to see if there's an inverse ETF for that one. Let me ask you, while we still have a moment here, any other specific places here, Jonathan Hoenig, where you are putting money now and or taking it off the table?
Sure. I mean, well, you know what? I love these areas, Frank, that seem very risky, but are actually doing quite well, so well that they might surprise people. And one of them is Africa. And part of that has to do with the rising price of gold, but there's an ETF that tracks the entire African continent, so South Africa, but also other areas, even sub-Saharan Africa. The ticker symbol is AFK, and they don't even call this an emerging market, Frank. They consider it a frontier market, which means, by all means, this is a volatile play, but I think you really want to go where you can see some substantial change and see some substantial moves. So I'm still liking a lot of the emerging markets, AFK, and I'll give you one more, and that is Indonesia. EIDO is the ticker symbol. Again, as one part of a portfolio, global stocks are far outperforming U.S. year to date. They're kicking U.S.'s butt. So go where the action is. I think you'd be surprised at how well these two names are doing.
All right, Jonathan, thank you very much for that thorough analysis as always. We appreciate it and look forward to speaking with you again very soon. That is Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, thank you very much for coming to the line here this afternoon.
My great pleasure. Thank you, Frank.
Thank you very much. And out to the freeways we go now on 790 KBC. Mottek On Money continues 790 KBC. The big story, Bitcoin hitting record highs. In fact, at the moment, appears to be hitting new all-time highs here right now. Let's bring up the latest price here on Bitcoin, moving above $111,000 for the first time today. And let's see where we stand right now, up about 1,600 at 111,217 as we continue to track Bitcoin very closely, hitting all-time highs. Ethereum has been along for the ride lately, still well off its all-time high, but higher than it's been lately, up around 2,600 or so. Doge at the moment at 24 cents. Solana at 178. Taking a look at gold at the moment, just below 3,300 an ounce at 3,297.30. Silver is at about $32 an ounce here, and platinum make it 33 an ounce, 33.20 for silver, and platinum, as was mentioned earlier by Jonathan Hoenig, moving above 1,000 now, up to $6.20 right now at $1,086.90. The price of oil, which we'll be focusing on some more coming up in the next half hour, pulling back 42 cents at $60.78 a barrel. We'll be taking a closer look at gas and oil prices heading into the Memorial Day holiday weekend. Coming up with John Kilduff, oil industry analyst, again, Capital and CNBC contributor. The Dow coming in for a closing loss today of just a point. The S&P 500 down 3, and the Nasdaq gained 53 points. The yield in the 10-year note at 4.54%. And now the latest news on 790 KBC. Mottek On Money continues here at 790 KBC. Here's some good news. Gas prices heading into the Memorial Day holiday weekend have hit a 4-year low nationwide as millions of people get set to hit the road. We have seen gas and oil prices come down this year under President Trump with the change in energy policy. California, though, prices still stubbornly high, in case you hadn't noticed. Let's bring in oil analyst John Kilduff now with, again, Capital and CNBC contributor, and longtime contributor to this program. John Kilduff, it's always great to have you with us here, and thanks for taking the call this afternoon.
Thank you, Frank. Great to be with you, as always.
Wonderful to have you with us here. Give us an update here. Mercifully, oil prices are down around $60 a barrel. That certainly has been helping the inflation picture here, hovering just below $61 a barrel here at the moment. Give us your view of gas and oil prices here at the moment.
Yeah, they've been, fluctuating quite a bit, Frank. There's been some heavy-duty inputs into the price mechanism here that have ranged from the Iran nuclear talks with the Trump administration now. Some days they look promising, other days they look like Israel's going to bomb Iran. So it's a matter of a couple of million barrels a day of supply to the market. So you see several dollars worth of price swings on that news. Same thing happens with the Ukraine-Russia war situation. To the extent things look maybe promising with respect to Russia in particular, we could get their supply back on the market or not. So we've been swinging wildly on that. The tariff situation, big input into this market too, to the extent we're hammering China with 148% tariffs. It's bad for the outlook for energy demand, oil demand. But when we take them off, then obviously the Chinese economy isn't looking as bad. So that's a big plus for demand. So that props prices back up. So this is what we've been living with here in the news cycle. The latest news cycle, though, is going to be over this weekend when OPEC Plus gets together. And something that I've been speculating about that could happen here is a battle for market share. And what does that mean? That means OPEC Plus and the Saudis are going to be putting even more oil on the global market, which I think is poised to push these prices down further here, Frank. It could be a great summer at the pump for most folks as OPEC Plus tries to take it again to our shale producers with a lower oil price and more supply. There was a big development on that front just really today with some reporting out of Bloomberg about what may come down the pike here at us over this weekend. So right now, the global economy just isn't enough to make the oil supply picture, what we refer to as tight or dear in terms of supply. So prices should be continuing to trend lower here, and it'll be interesting to see how low they can get. I think we can easily get back down towards the low 50s if this OPEC Plus scenario plays out.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KBC, live on the air with prominent oil industry analyst John Kilduff, and again, Capital and CNBC contributor. In the meantime, consumers enjoying lower prices heading into the Memorial Day holiday weekend. One calculation I saw is that they're 14% lower than last year here in the Los Angeles area. Of course, we're probably paying the highest nationwide. Regular gas averaging $4.80 a gallon, premium at $5.19, diesel at $4.98. A year ago, regular was at $5.13. Now it's at $4.80. So we're getting a break there. And what do you see ahead for gas prices here, John?
Well, in California, Frank, it's getting really problematic. I mean, since 2008, you've had a half a dozen refineries closed there, and now you have two other big ones there that are going to close as well. Phillips 66, as you're aware of, and the Valero plant in Benicia. I'm not saying that right, but it'll now be up to 8. So I don't know if you'll ever see true relief at the pump in California for a long time. To the extent we're seeing it in the rest of the country. And I will say with the national average right now of $3.19, it's amazing what you can kind of get used to because that's certainly an elevated price. But, this time of year, actually these several weeks are actually the high price point because the market is fearful about what the supply situation is going to look like for the upcoming summer. That's what we're in the throes of right now. So I would expect, once again, that this will be the high price point for the summer and will head lower. But Frank, the war on fossil fuels in California, really has to stop until you can get further down the road, pardon the pun, on the transition to EVs and the EV network and other ways of supplying the energy that's needed for all these things. And now you're going to have those electricity supply for those cars competing with electricity supply going to data centers that we've been hearing so much about because of the boom in artificial intelligence and all the great things that are ahead for the economy. So I think the California folks in particular need to revisit their stance on fossil fuels.
All this at a time when California is literally swimming in oil. 100 years ago, California accounted for 25% of the world's oil production. A lot of the wealth that was built here in the 1920s here in the Los Angeles area and throughout California was built on oil money. As we see here with the Getty Center, of course, that was Getty Oil. They put that art collection together on oil money. And the Hammer Museum, that's named for Dr. Armand Hammer, where Occidental Petroleum was headquartered there in Westwood. When you drive by there, you see the Hammer sign. That also has a very large art collection, largely built on oil wealth. From an investment standpoint, John Kilduff, where would you be placing your bets here at the moment?
Yeah, and those La Brea tar pits, Frank.
Right, that's oil. That's right.
Fossil fuel, an open pit of it. But yes, but in terms of the investments, Frank, there's been a little bit of pullback with these lower oil prices. It's been a little challenging. So the stocks themselves have had a little bit of an issue But I still would tell you, when you look at what we just talked about with 8 refineries closing in California, with very strong gasoline demand last week, and I expect it to persist through the summer, we're not as overwhelmed with supplies of gasoline and diesel fuels in the country. So they are outpacing on a value basis crude oil itself, at least for now. So the refiners like Valero are something to look at. And also, too, the conversation we just had about electricity prices and how that's going to translate into the demand for natural gas, because natural gas is going to fill this gap to the extent there is one on supplying the electricity that's needed for all of these things. There's a company you might have been heard about in the news, NRG.
Former MLB All-Star Sean Casey, a.k.a. The Mayor, keeps hitting it out of the park.
Take my 30 years of experience. Take the wisdom and knowledge I've learned from the failures when I got sent down my rookie year, all the injuries I had to overcome. Your mind is the most important tool you have in life. Be relentless. Keep charging. It matters how you talk to yourself, how you look at the world. That matters. We talk about that. I don't know. I'm fired up. Baseball's back, and it's going to be incredible. I love it.
The Mayor's Office with Sean Casey from Believe.
Follow and listen on your favorite platform.
Huge company has been in the process of buying up what I call natural gas-fired peaker units, and basically these are natural gas units that come on when the air conditioning gets heavily used, as these data centers get built out. They sort of bridge the gap and keep the electricity grid going, especially too when the wind and solar are letting us down a bit. So this company, NRG, is one to truly look at, and EOG Resources is another one that should be invested in by your listeners, no doubt.
All right. Well, John, thank you very much for that thoughtful assessment as always. That is prominent oil industry analyst John KILDUFF with Again Capital, CNBC contributor, and very grateful to be a longtime contributor to this program. We thank you very much, John, and wish you a great holiday weekend. Thank you very much for joining us live here again this afternoon.
My pleasure, Frank. Thank you.
Thank you very much. And out to the freeways we go now on 790 KABC. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Tune in this Saturday at 8 a.m. to hear me interview Dave. He's the boss at United Gold Group, and you'll learn a lot about how to invest in gold. Or give my friends at United Gold Group a call right now at 800-753-8534. Mention Mottek, and you can get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534. Again, that's 800-753-8534. Or visit UnitedGoldGroup.com. Mottek On Money continues 790 KBC. A cliffhanger in Washington and a big sigh of relief for small business people as the House passed the president's giant tax and spending package by a single vote. Joining us live now is Jeff Brabant, Vice President of Government Relations for the National Federation of Independent Business, also known as the NFIB. Jeff, thank you very much for taking the call here this afternoon.
Thanks for having me on, Frank.
Great to have you with us here, Jeff. Give us your reaction to the passage in the House of that big, beautiful bill.
Well, it was razor thin, like you said, very close, but it's a huge deal for small businesses. NFIB, we represent about 300,000 small independent businesses nationwide. Our average member has about 7 to 8 employees. So this is a big deal because if you look back to the Tax Cuts and Jobs Act back in 2017, they made the big business provisions permanent, those for the lower C Corp rate, but 9 in 10 small businesses don't pay that lower C Corporation rate. They actually pay individual rates. And when Congress lowered the C Corporation rate by 14 points, and you pay these individual rates for regular small business, they were looking at a 21% corporate rate versus a 37% top rate on individual income taxes. So what they did was come up with this 20% deduction for small business owners that they can deduct and lower their effective tax rate to get in line. The only concern with that was that's due to expire at the end of the year. Now, the bill they're calling the One Big Beautiful Bill contains not only permanence of this provision to allow small businesses to compete with their larger rivals, but it's going to increase the provision from 20% deduction to a 23% deduction. So Congress is trying to give small businesses a leg up. They're trying to make them a little more competitive with their larger rivals, and that's in this bill. And this bill is a host of other provisions that are going to be extremely helpful to the small business economy if it can make it through the Senate and get signed by the president.
All right, so you had a front row seat in all this. Looks like the arm twisting worked in this case, right?
Yeah, it's always interesting right now with the House Republicans in the House have a historically slim majority. They can only afford to lose 3 congressmen if you're doing a party line vote before they lose. So it gives new meaning to the word whip in the House.
Wow. So you were right there advocating for small business. And so what are the prospects here in the Senate? Is it smooth sailing here now?
I think it's going to probably take another month or two. It's still early in the year. And there's one thing I know about the U.S. Senate is they don't like being rolled by the House. The U.S. Senate is a significant body. They're going to have their own way. They're going to either make small tweaks to this or some more significant tweaks. It's unclear, but they'll have their own vision. They'll send it back to the House at some point. And my assumption is after the Senate passes that, they'll send the House, and the House will probably have some more arm twisting before it gets to the president's desk. All
right. Certainly. The good news is it did pass the House, and looks like we're in for lower taxes, not higher taxes, right?
Yeah, absolutely. It's going to not only stop a potential massive tax hike on small business owners and, frankly, every W-2 wage-earning American. It's going to cut taxes for many, many wage earners, and it's going to cut taxes for small business owners, which is a real win.
All right. You have, of course, a great feel for the pulse of small business people here. We've been seeing these various confidence ratings slipping lately because of a lot of uncertainty and tariff worries and so forth. What's your latest reading on the small business mood out there?
So after the election in the fall, the optimism spiked, and since then it's been slowly trickling down. And there's a lot of uncertainty out there with the number of different ways tariffs were introduced and changed and moved over the years. And if you turn on the news and you see the market fluctuations, if you're small business owners, there's obviously going to be some uncertainty and that's what we're seeing. We're seeing, for the most part, business owners are saying, well, my business is strong. I'm doing well, but I'm not sure what the future holds. I think if Congress can pass a tax bill to help assure them that at a minimum, they're not going to have to plan for a tax increase next year, it'll be very helpful.
All right. What's your reaction to this pause on the 90-day pause with China and the other big news we've seen related to tariffs? Looks like they're going to go right down the line. The UK got that deal, and of course the other big deals announced from the Middle East over the past week. Anything else that's top of mind for small business people?
I think those are great for business owners in terms of the certainty we discussed. So if those can get under control, like I said, if we can get a tax bill done here, these are big things for small business owners moving forward. And, once they're done with this, if they could just make healthcare a little more affordable, they'll have everything issue solved. And I say that a little tongue-in-cheek because we know it's a very difficult task.
Certainly. Well, thank you very much, Scott. Jeff Brabant, that is. Jeff Brabant, Vice President of Government Relations for the National Federation of Independent Business, the voice strengthening the voice of small business across the country. Jeff, thank you very much for joining us live here this afternoon on Mottek On Money on 790 KBC. Mixed finish for stocks today with the Dow slipping 1 point. The S&P 500 down 3 and the NASDAQ up 53 points. The yield in the 10-year note is up there at 4.54%. We did see the volatility index pull back 3% today. The other big story, of course, Bitcoin hitting record highs right now above 111,000. Stay tuned for the 790 KBC News Blitz with Randy Wang. And then at 6 o'clock, stay tuned for the Just Help One radio show and podcast. I'll be back on the air with the CEO of the Union Rescue Mission, Mark Hood. Stay tuned at 6 tonight for the Just Help One radio show and podcast here on 790 KBC.
No Contest Wrestling. O'Shea Jackson Jr. and T.J. Jefferson with the biggest names in the game.
Ricky Sainz is in the house, everybody. NXT North American Champion, baby.
How you feeling right now, man?
I feel great.
Jay Uso. What's going on, man?
A lot of heavy days, but it's okay, man. It's part of the game.
They know who they are, bro. And you know who I am. TJ, can you tell them where to find us?
I mean, why else are we here?
You can always find us No Contest Wrestling. Check us out.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.